What is good, YouTube? It's Too Fresh from TA Options back with another video, and today we're going to go over the time and sales. We're going to go over how to read it, why use it, and how to use it. So if you learned something new, go ahead and like and subscribe. It's free, totally free to you, and it only helps me out. So I appreciate it if you do. So let's get right into the video. Behind me right now, you'll see Apple just reported earnings. We got a nice shoot up. We'll see if that holds until the market opening tomorrow. So this is Apple's 5-minute chart, and this is what we're going to use to practice how to read and learn about time and sales. So we're going to go column by column. The first column is time. At first, time and sales can look a little bit confusing and a little bit daunting, but I promise you by the end of this video, you're going to understand it. We'll all be good. So the first column is time. Pretty self-explanatory. You can see the hour, the minute, and the second that every order is filled on any exchange. So the tape, or the time and sales, another word for the time and sales is tape. Every single line is an order filled at whatever price on whatever underlying you have. So in this case, it's Apple. So at 4 p.m., 25 minutes, 53 seconds, 54 seconds, this order was filled. So time is that first column. The next three columns are going to all kind of be grouped together. The first one is bid, the middle one's price, third one's ask. So the bid and the ask is just the spread on the stock at the time. So bid are buyers and ask are people that are selling. So the difference between the highest bid, or the highest person that someone's willing to pay, and the highest sell for the lowest, or the lowest sell for the lowest price someone is willing to sell at. So that's the bid and the ask spread. The price is the price that certain order was filled at. So if a price is filled on the bid, that means somebody who is sitting there waiting to buy ended up selling at that price. If it's filled on the ask, if the price is the same price as the ask, then that means somebody sold it at that price to someone looking to buy at that price. Now we'll go over a little bit what that means, how to interpret it in a little bit, but let's continue on with the columns. The next one is size. So this is the number of shares that were purchased on that given order. So as you can see, 5, 253, 80. This goes anywhere from 1 all the way up to infinite amounts, theoretically. Whoever wants to buy infinite amounts of Apple, if they got that money, that's good. Some brokers and some exchanges have a minimum lot count of 100 in order to place an order. So Thinkorswim will go below 100, but some brokers you'll see the number 0 or the number 1, and they count it by 100. So if you see a 0, that means an order of less than 100 shares was filled. If you see 1, that means 100, and so on and so forth. So the final column is the X column, which is the exchange column. Typically, I don't really care what exchange is coming from, so I like to take that off just because it adds too many columns and there's already a lot of things to be looking at on time and sales. Now you're going to notice that there are some green ones and some red orders. So green and red orders, and they mean different things. And once we go over to Lightspeed on a different broker, you'll see that there's more than just red and green lines. But we're going to start on Thinkorswim because this is the free platform that I feel like most people are going to be looking at something along these lines. So now for the colors. Red, you'll see that the line will be red when the price is on the bid. So when the price right here is 167, that's the price that the order was filled at. It is equivalent to what the bid is at 167, while the ask is 167.05. So red means that someone is taking liquidity off the bid, and that typically means that is a downtick in the stock. There's a sale order at that given price. So that's why it's red for a downtick. Green, you'll see that the 169 is on the ask. It is equivalent to the ask, while the bid is 166.98. So when there's green, that means someone is taking liquidity off the ask, or in other words, that is a bullish signal. That's why it is green. So you'll see an uptick in the stock usually when liquidity is taken off the ask. Now, once we go over to Lightspeed, you'll see a little bit of differences here, but you'll see that sometimes there's an order that's placed in between the bid and the ask, near the midpoint. Now, I believe Thinkorswim just codes it green or red if that order created an uptick or a downtick on the stock. So in general, if you see a red tick, typically that means that stock had just moved down because of that order. The price of the stock just moved down because of that order. Green, vice versa. If you're confused as to why somebody's order is affecting the price, it's just simple supply and demand in your basic economics class, and I'm sure you could look that up if you need to. So real quick before we move on, how to use time and sales in your trading, I wanted to give a quick example of a different broker where it's a little bit different than Thinkorswim, as we just talked about a little bit. So I know that this is just a ghetto screenshot from Google, but right now Lightspeed is currently not updating their times of sales since it's after market hours, so we're just going to go ahead and use this. And also, I know that this is an option time and sale, so this is not the actual stock, but it applies both ways. It's all the same. So there are just a couple differences, but really it's the same thing. Just first of all, there's different column orders. We're going to go price, size, time in exchange versus the other way around in Thinkorswim how I had it. But the main difference here is that you'll see that there's a highlighted green, a normal red, and a white, and there would also be a highlighted red as well, and these all mean different things. What's missing from this screenshot that versus Thinkorswim is the bid and the ask versus the price. So you can read that same thing based off the color. Green, just a normal highlighted green, means that price was taken off on the ask. So this is the exact ask at the time. Unfortunately, we don't get to know what the bid was during this specific order, but we know that $8.55 was the ask and that was the purchase price. Again, meaning an uptick typically in the stock or the underlying. In this case, the options contract. Again, the red just means that the price was ordered at the bid. So $8.45, that was filled at the time. That was the bid of the order. So at the time of order, $8.45 was the bid. Now, the difference is this highlighted area right here. Highlighted green means that $8.60 was above the ask at the time of the order. So let's pretend that the bid was $8.45, the ask was $8.55, but the order was filled at $8.60, which is 5 cents above the ask, which indicates huge buying pressure and a definite uptick in the stock. Now, if you were to see a red highlighted bar, that would be the same thing to the downside. That means that the order was filled at below the ask, which means immense selling pressure on the stock as well. Now, this white line just means that that order was filled in between the bid and the ask. So typically, if you get an order between the bid and the ask, it's not going to have that much of an effect on the price of the underlying. So we highlight it in white, or we make the text in white, and it's not really that important, but it's white just so you can know that the order was there. Now, just as Thinkorswim did on the overall coloring without specifics, Lightspeed does have this one specific column right here in the middle, which is the green or the red arrow up or down, and that just represents the result of the underlying based on that specific order. So green again, uptick, red again, downtick. Now we're going to talk about how to use the time and sales in your trading. So if you're trading with us at TA Options, typically we trade breakouts, and you can definitely use the time and sales on those breakouts to help you confirm that the breakout is actually real. But another really important way in time to use time and sales is when trying to buy a stock at support and when to sell a stock at resistance rather than play the breakout to both other ways. The time and sales really gives us a good indication as to when big money is stepping in to buy these levels. And to be totally honest, as a retail trader, my buy and sells are not going to be affecting the market. You need to have really, really big size in order to do that. And when we trade, we really want to see other people with big money following the same thing that we want to do. Because if you understand supply and demand, when a lot of people are trying to buy, then the price will go up, and a lot of people are trying to sell, the price will go down. And so when we're playing those buys at support, those bounces in stock prices, we want to see that big money and lots of orders. Specifically, we see a lot of high size numbers on orders, buying the ask on purchases so that we can see the stock move back up higher while after finding its support. And then the same thing vice versa on rejects. Unfortunately, I don't have an example, a live case example of this since I haven't been recording my screen in a while, but we can play a theoretical example. Let's say that Apple right here has a support at 166 at this red line right here. And we want to wait for the price of the stock to come down to 166 and possibly take a bounce at this level. What we want to see on the time and sales is that when the price is approaching 166, we're starting to see a lot of buys at the ask and with significant size. We don't really care about those orders that are coming in at like 2 and 3 and 6. Even like 50, 75, sometimes 100, that's not really going to be moving anything. We want to see big numbers. We want to see things in the 400, the 500s, even the thousands is a great signal that big money is stepping in at this price point. So one trick you can do, and pretty much any broker I've ever seen, what you can do is you can filter the size. We want the minimum size to, let's just say 100. So if you do this, it's only going to show orders, the time of sales is only going to show orders of quantities of 100 or higher. So you can see that the time of sales is moving a lot slower, but that's just because we have that minimum filter. And so the same thing would go for playing stocks around resistances. So let's say this 168.4 area on Apple is a strong resistance, and we're waiting for the stock to come up and hopefully reject, creating a double top here and come back down. What we want to see at 168.41 is a lot of selling, a lot of people taking profits if they maybe played the 166 bounce or something before. What that would look like is a lot of red in other brokers like Lightspeed, like we saw. We want to see highlighted red, which means immense selling below the bid, people just trying to get out and take profits at this level, which would then push the stock downward. And so the same thing goes for breakouts. If we're trying to play breakouts, we're trying to play the breakout of 168.4 right here. As the stock is approaching, we want to see lots and lots of orders, big orders being filled at the ask or above. That indicates buying pressure, and it signifies that there more than likely will be a breakout through that pivot point. And then the same thing playing to the downside. We want to see 166. We want to see a lot of selling going on at 166. People getting in, big money getting in to play that breakdown of support at 166. That would be signified by a lot of red on the tape, with especially those highlighted bids. In practice, I would say that reading the tape is a very simple exercise to explain and even practice looking at after hours and things like that. But really, when you're in the, especially at market open, when a lot of orders and a lot of volume is pumping through a stock, it can get overwhelming and really hard to read since it's moving so fast. But reading the times and sales just comes with practice. Pairing this with reading level 2 and seeing orders being placed on there that have yet to be filled is a really good thing to add to your trading while looking at technical patterns and charts and flows and things like that. So the best thing to do if you're trying to learn how to read the tape is to just sit there and practice. Find the level that you claim as support or resistance and just watch the tape at around that time, and you'll be able to see if there's a lot of buying happening just looking at the green, or a lot of selling going on at the red. And you'll be able to see if there's a lot of buying going on at that time or a lot of selling going on at that time. You'll be able to see and notice patterns as to what type of orders come in at certain pivot points or supports or resistances, and the differences between those times where there's a breakout and when there's a reversal. And like I said, at TA Options, typically we trade breakouts, but right now, since the market, ever since this starting year of 2022, breakouts really haven't been going, and there's been a lot of really prime opportunities to take bounces and rejects at specific support and resistance levels. Things like trend following, pre-market highs and pre-market lows, breaks, remounts over specific support and resistance levels, those things have been working really good, as opposed to the minimal amount of breakout levels and breakout plays that have been going on. So again, I hope you guys found this video useful. If you did, please leave a like on it, subscribe for more content exactly like this. Let me know in the comments if something else you want to learn, and I'll do my best to be able to make a video about it for you guys. But for now, that's all, and I'll catch you on the next one.